Welcome everyone to the Kendall Report. It is Wednesday night, coming into Thursday at the end of this week. Plenty going on. We're seeing the markets continue to deteriorate, and I'll cover a lot of details. I'm still amazed. I'm telling you, the database is not, I'm going to go through more database stuff tonight because it's still hanging in there. And I went through a deep dive in there to see what's going on and what's happening here. And so it's still hanging in. And I'll go through those details here in a minute. The title of this video was Markets Testing Critical Support. And I mentioned two numbers last night, 39.25 and 39 even. Those are critical. One is a pivot from one of our models, and the other one is 0.618, which is 3,900 even. So we're doing a full-blown retracement of the rally that we saw in June. And I think, like I said, when you see database and some of these trades, there were some monster big trades that came out of that June lows when they came in. And like I said, I'll show you the details here in a minute, but there's just a ton of things going on. One of the things that the PPMs, which I'll show you here in the technicals, a few minutes, the dailies exited on 823. We got plenty of downward signals, and I thought that we would hold the 40 period moving average on the daily and the 10-week at the time had a huge upward pressure there, and we just went right through that, and now all of those numbers are starting to roll over. So I'm going to lay out what's the critical number on Friday, and the probabilities are looking like even our intermediate model on the S&P could end up going and taking a loss and just going flat here. We'll see what happens. But in spite of that, I've got some really interesting things that I think I put together. It is the beginning of September, so Thursday is September 1, and I'll be covering some of the monthly aspects as well and where some of those numbers lie as far as the market grid goes, and review last month how the market grid played out. And as you know, I spent a fair amount of time talking about coming into August that we would go up to the 43.20 level. We actually went to 27. We pulled back. Patterns were setting up to look like we were going to see maybe a retest of those levels. We now know that was not in the cards. But there is, like I said, some good technical setups here that need to be paying attention to. So what I told you the other night, what we're going to hear every day, Monday, Tuesday, and Wednesday, we had Fed chairman. We had Mester come out yesterday from Cleveland, and they continue to put this hawkish tone out there, triggering the algorithms. And the second we saw that, we did trade R1. We never got to an R2 yesterday. We did get R1, and then we just got a rejection again, and all the way down, and printing some critical levels on the downside. But the numbers we saw, ADP came in at 132. I talked about that number last night, that they're revising the numbers, supposedly trying to get them more in correlation with the actual employment numbers that come out of the Commerce Department. We'll see if that's true, because if that's the case, they came in at 132. They were expected to be 270. As we come into Friday, we're looking at the expectation of 300,000 new jobs. So if that misses to the downside, then maybe, I'm not predicting this, but I made a little note, is bad is good and good is bad, and meaning that bad news is good news and good news is bad news. So we've got this where if it comes in at 300 or more, then we're on the table for 75 basis points coming into the Fed meeting. If it comes maybe in like the ADP did and misses by half or more, maybe then people start talking, well, maybe they're going to do 50, and maybe we'll get some moderation of things. And there are no more Fed speakers. I didn't say anything on the places where I go to see if there's any more Fed speakers this week. But it looked like they set this thing up Monday, Tuesday, Wednesday, hawkish, hammer it, and then we come into Thursday, we've got all the big numbers. Everybody's kind of quiet coming in to the unemployment numbers on Friday. So that's going to be an interesting thing to see. Just looking, I've got notes all over the board here, so bear with me for a minute. I've got quite a few things that I want to talk about. Looks like a lot of these things are related to the technical section I have notes on. But yesterday, 10, 11 sectors were down. S&P down 0.78, down 0.56, 0.62. And today, what we're seeing right now, the overnight and Thursday is going to be the 5th day down on this break. And I'll show you this bar count pattern that's set up absolutely perfect. And we'll see if it matters or if it even holds. We saw in the live room today, we're looking at some key numbers, and on the market grid numbers, nothing mattered. They just blow that thing out. And it was obvious at the end of the day, there was massive amount of selling coming in at the close. They really want this thing to look as bad as possible. So I still think it's a setup, and I'll save this for the technicals. Let's take a look a little bit here. So tomorrow we have claims expected to come in 255, continuing claims 145. I still think these numbers are going to be a little worse than expected. Otherwise, claims would be a little higher, and the continuing claims will move up toward that 1.5 million. We'll see if we can get above that number. If we do, I think maybe that'll start to set up more of this attrition. We did see housing numbers, all the housing mortgages are off, everything's off. So we're seeing all of the economic impacts that has been talked about, and we're seeing, I guess we'll go back to the last couple of raises in the Fed, and we're seeing that happen. And as far as the mortgages slow down, and now we've got a pretty good. There's a lot of sellers here in the treasuries as well, as we picked up to around 311. That I still think 312, 316, cover that in a few minutes as well, is going to be the top end of the yields for the moment. There might be a lot more down the road, but we're definitely looking at this type of pattern that is going to keep flowing the way we've seen it. And I'll talk about that in a minute. So let's go ahead and get in database. I'm going to do a little bit more again tonight, as we're going to go into the weeds a little bit on individual symbols. I want you to see the breakdown on when I'm talking about what the percentages are and all that, so we can make some sense of that. So let's get into the database. All right, so here we go. We had 501 sells, 83 buys. We're at 59.15%. This is the weekly that you're looking at right now. Let me flip this over to the daily. And like I've been talking about, the daily still is maintaining a very high percentage, and it's interesting what's going on. And we were going through this in the live room today and looking at the sectors. We still have 4 sectors long, and some of these sectors we're getting to the outer range of the expectations here. Let me just go into full screen mode so you can see the whole page here. But what I want you to see, and I'm going to draw a couple of things in here, so let's get into some of the details. So over here on this side of the page, let me just draw in a box here. We're going to start with this optimized daily. I talked about that yesterday, and there's a number of things that are happening here that are somewhat important, but most important thing, I think, is what's going on with these sectors. And right here, I'll just put a box around here. So consumer cyclical, typical holds for 51 days. The energy holds for about 44 days. It's 12 days into that cycle. And right now there's a 3.4. This is on a 3.4% gain. This is on a daily basis. And now we're looking at 4.7 on services, and technology is 39 and 56. So some of these are starting to get a little bit long in the tooth toward the end of their cycle, and it's possible we could see more attrition if we don't see the markets get a turnaround here. This is going to start to affect some of these stocks. Let me just take this off, and I want to show you one more thing here that is, I think, important. We do have one sell on a sector level, healthcare. If you look way at the bottom of this page here, 47 of 47, so it held exactly the normal holding period. It was down about 4% as a sector. Doesn't mean all the stocks lost in there, but it wasn't a negative trade for 47 trading days, better part of 2 months. And the rest of these are still hanging in. Some are newer than others. So let's go ahead and I have to make 2 clicks here to make this happen, so bear with me. So let's take a look, and let's just look at the technology, because that's also been the way that the NASDAQ has been performing. You would think it was this would be a bad sector. Let me go back one. Technology is up only 3.6, 39 of 56. So we look at the breakdown. I'm just going to randomly pick let's just do communications equipment. We'll just grab the top one here. And this breaks down each one of the stocks that are long. So this is what I was talking about. If you just go through some of these stocks, here's CTV up 70%. Now this has been holding right now for 36 days. And this is the kind of trades. I went through a bunch of stuff tonight. There's a bunch of these out there. EXTR, Extreme Networks, up 49% in 47 trading days. There's just some really big trades here. There's one down. You can see that there's a lot of good trades, not very many negatives. This list here is everything that's neutral, and there was no new sells for today of this sector. I went through a bunch of these sectors and groups, just trying to get a feel for it. And a lot of these, look, at the top, we break down this right here. You can see I clicked on the computer services, and there's only 57 stocks in this group, but 40% of them are long. And you can see the same thing. There's a bunch of these that have some decent gains. Most of the losses are reasonably small. And then as far as we come down at the bottom here, there was no new sells here. So a lot of these big trades, if we came up here, here's COGT. That's actually a bioscience, but this thing is up huge numbers. So what's happening here with the database, I went through a bunch of these. I won't bore you folks with going through a lot of this, but what we did see when I was reviewing this just tells me why some of these trades are so big. They're up 20, 30, 50, some 80% plus. I went through sector after sector, just glancing through here, and this is what's going on with the database. I'm thinking, why aren't we seeing more selling relative to what's going on with the indexes, right? And this is when you start to see maybe an aberration here with the database versus what's going on in the index. But I still think, because there's so many of these stocks that are still in good uptrends, they're not all going to get kicked out. So what you see sometimes is extension in these trends, and you get a rotation where the market will correct back in, and then the trend will resume itself. So just because it says normally holding for 47 days doesn't mean it'll exit. It was interesting that the healthcare sector did exactly that. But this is what's going on with the database. And if you have some of these individual stocks, those of you using Wavetech, you know some of these trades are just outrageous when they come on, especially when we came out of that low cycle that we were in when we were printing down at 3,600. So this was pretty significant. Okay, let's get into the technicals here. Okay, a couple of things that I want to go to. I want to go to the trading view with the indicators right now. We're seeing a lot of acceleration. We're down minus 0.85, big time downtrend on the S&P. This is the futures on a daily basis. And what I'm going to show you here, which I think is important, I mentioned to you, if you've been around the channel for a while, that I am a bar counter, and there's several different variations that we get, and a 535 is one of the most classic that comes out of this pattern. So let me just show you what's going there. So from this top right here, We got, this is the 5-bar pattern coming down. There's 5 down. We got 3 up, and then we got the reversal on last Friday. And now today is the 5th day pattern. So we got a 5, 3, 5. And that's 13 days Fibonacci, 13-day Fibonacci cycle coming in right here. Will it matter? Will it mean anything? I don't know. We're going to find out. Bear with me one second. I got a little screen issue going. Okay, it's unfrozen now. So this pattern is very, very significant. So this is what we're going to find out. Let's go back to TradeStation, get back into flow. Sorry that my tool froze up, wouldn't let me get off that screen. So we have deep acceleration from the standpoint of what's going on here. So we're going to find out whether this 39.25 means anything. Right now, the low 24 exactly. And this is going to be the critical number I want to put out to you. Yeah, hang on one second, folks. This damn thing is stuck. Okay, looks like it's working again now. Okay, so this is going to be the critical numbers as we come into Friday. So there's two things that have to happen. There's 2 miracles. I'll steal from the movie Top Gun. 2 miracles. The first miracle, we got to hold 39.25, 39 even. If we hold that level, that's good. But the second miracle means that we have to close on Friday above 40.40. I mentioned this number yesterday. This is still a key number. If we don't get above that, then there's a very strong chance that we're going to go to the next level. And I'm going to bring up, I'm sorry about that freezing on the screen, but let's go over and let's go to the monthly, since we have a new market grid for the month right now. Let's take a look at this. So S1 is 38.50. So that's another 80 handles from where we are right now. R1 is 40.62. So right there, that's on a monthly basis, that's R1. R2, 41.81. R3, 42.99 and 44.05. And I was talking about this several months ago, that what we're expecting to see here is that a broad range staying within this this box formation and remaining above the 40-month moving average, 36.73. I still believe that low that we had at 36.36 is a significant low. And what we're setting up here is just a retracement of that value. The monthly says we could hit 38.50. Let's review last month to see how it did. R2 was 43.78. We got 43.27. On the downside, the low was 39.53 and S2 was 38.88. So we stayed above S2. We went just below S1 at 40.18. And so pretty much stayed in the range of expectations. So S1, R2, maybe S1, R3, that would put a retest at 4,300. I still think we're going to see some rebound in here if we get the deterioration and the two miracles don't happen. Otherwise, if we can set up some kind of pattern where we hold the 39.25, 39 even, that's for this week. And if we fail to close over 40.40, that's going to put in a lot of things here. All right, let's get into the NASDAQ. So NASDAQ, we're coming into this 40-month moving average. As I've talked about before, we're seeing a continuation of the NASDAQ having a little broader range. We got a big reversal last month, pretty ugly. PPMs are major negative. PPM 1 is minus 2.89, minus 2.4, and a positive 1.07 on the 40. And that's at the 11,849. So I'm still going with the pattern of staying sandwiched between the 40 and the 10, 21, probably the 10. And that number this is not going to move much this month, folks. These numbers are going to stay fairly static. Let's go and just break down and go. We're going to go top down. We'll go from monthly to weekly. The weekly is coming down. We've taken out, like I said, my expectation was originally we would hold that 10-week moving average. You can see the PPMs have rolled over substantially. We're now only up 0.03, and this is a bit of a problem. There's a major pivot down here at the 11,590 area on the weekly. That kind of matches along with that monthly number I was just talking about, but we're definitely got some big pattern here. And like I said, I'm going to draw in a pattern again because the definition of a low is when the market looks the worst. And I just continue to see this pattern set up. Bear with me one second. So basically, we're setting up. This is the right shoulder pattern here, and I don't see us going up in a big way, but I do see a mini right shoulder where the length of this will be a shorter. I'll go into that another time if we hold these numbers and Miracle 1 and Miracle 2 occurs. Then we can talk about that at that time. Finally, we'll get to the daily. Daily's down another 0.93 right now, down 114. Same pattern, 535. We got huge acceleration. Looks like it's a never-ending low, but if you look at some of when we were down at the previous lows, this is basically how things look. So we'll see if we can hold and get. I'm really basing everything on holding this 3,900, 3,925 on the S&P. If we can hold that level, fine. If we don't, then we're definitely going much lower, and we're going to test some of those levels I just discussed. Yeah, I see someone said it's time to go to Linux. I'm just when I use this one tool, it keeps freezing my screen. I can't get off the screen, so I just got it on froze again. So I'm not going to use that tool again. So as we come into the Russell, we went through the 40 period here on the daily. We've been holding that for a few days, but the Russell once again is kind of leading. PPM1 is still very negative, but trying to turn up, maybe to bleed off some of this downward pattern. Same pattern, 535 is there, 13 days, magic number 13. We'll see if this holds. So if it doesn't hold, I'm just going to go back to this. Go back to the numbers here on the S&P. If it doesn't hold that 925, 9 even, that's going to be an issue. But the reason why I went through the database tonight to show you what it's holding. It's not holding Tesla and all the main index stuff. That's not what it's holding. And this is, I've seen these setups before. This is fairly unique. And I'll go through tomorrow night when we talk. I will go through the intermediate database. Intermediate database, 7 out of 10 stocks are still have no position. So it's not that I'm bullish or any of that stuff. It's just kind of interesting. What I'm saying here is that based on some of the database is that this looks to be more of a right shoulder. We'll see how it plays out, and we'll see who's old. I'm not trying to be right or wrong. I'm reading the numbers. I have 0 long positions in the S&P. There's nothing going on there. So I'm just yeah. So that's what's going on. Let's go ahead and go over and let's dig into the 10-year. Listen, I don't know why anyone's long in this market right now. Our intermediate's long, but I just don't see it. We got out on the 23rd. So let's go ahead and look at the 10-year. The 10-year is at 313. I talked about the 316 level. That's still a big number on the upside. There's extreme is around 320. We're looking at the market grid here. We're looking at 314 to 319.6. That's the extreme. And we still have this mixed picture here where we've got PPM1 is trying to turn up, but it's flat. And then PPM2 is deselling, but it's still positive. So there's still an upward slope here, and yields are not going to drop much. Like I said, the maximum that is likely to come down right now is 392, and that's a long ways from here. So that's not even part of the scenario that is out there right now. Take a quick look at the daily. We're looking at 3.85. Hang on, I'm just trying to see this number. That's the 3.04. Sorry, I can't see it. It's a tiny number. 3.04 is the key support on the daily. But we're looking at PPMs. They're still positive, but they're starting to roll over. So like I said, I think we peak out somewhere around 316, no more than 320. We start to come back into 304, maybe as low as 292. We should see a little bit of a pullback here. Now we got a buy signal back at 279 when we were down in this hole. This, you'll see if you look on the pop-up. If you look up on the pop-up on the page, you'll see that that number's right there. Sorry, the screen didn't come up. But the pattern that's unfolding here is we're seeing these PPMs rolling over. We're looking at the signal that came in on 8.8, basically to go long yields, which is a rising yield environment back, and we've been rising all the way through. And we're getting close probably to the end of this daily cycle, getting into that 38, 40-day cycle that typically these dailies will run on. And we did have an elongated one way back here in March. It stayed long from March all the way into May. So that was a better part of about 2 months and change. So same kind of scenario here. We still have an uptrend. We don't have any signals here that are suggesting that yields are going to drop much. And I expect, like I said, we're going to call 304, 316 is probably the range that we'll stay in. Okay, next is crude oil. Crude oil pulled back into some of these numbers, heading back towards that. I'm going to flip over to the weekly here because this is a much better pattern to look at. We're coming right back onto that 40-period moving average, 89.31, last 89.42. So we came in there. We were a little bit below at 88.27. We should continue to hover here, but we are seeing some pretty big down pressure here coming in on PPM1, minus 0.54, and PPM2 is flat. PPM3 has still got a 0.96. We should continue to hover around this number. And looking at the market grid from that standpoint, we're looking at S2 89.91. So we basically have done an S2. I don't think we get to the 87.02, which is S3. I think we probably bottom right in here, but continue to be in the range I've been talking about, 96 to, we'll call it 96 to 90, 89, where we're printing right now. This is pretty much the range, and I think we'll continue just to work this slope here. And if it were to close substantially underneath this 89.31 and PPM 3 turn back down and get negative, then we could see some really interesting things in crude oil. And I think there's some rumors of somehow Iran and some other oil coming to market. So it's going to get, I think, very interesting. So If that happened, I actually think if the Ukrainian situation wasn't going on and Russian oil and everything was on the markets, I think we'd be looking at a very different energy market. So maybe, some of these rumors and things that come in, and we could start to see some prices move lower in crude oil. Once again, what does that do? If that happens, is it because of demand? Is it because of more supply? Or what is it actually going to be from the standpoint of the causing prices? Is it going to be that the economy is slowing down? I think it's all of the above. You could have more supply, economy slowing down, and just see prices go down. But in the end, what does that do? That's going to affect the inflation outlook. So like I said, don't be surprised if there's a pivot, all right, and the pivot's from the Fed telling you that they've got to keep raising rates. Once again, like I keep arguing, they've been behind the curve and everything, so now they're going to go too far. Maybe they will destroy the economy. But at the moment, I'm still going with the metrics that I presented here tonight. So let's take a quick look at gold and Bitcoin, and we'll call it quits for the night. Okay, so we'll take a look at gold. Gold continues to deteriorate. It's down to 1716. I've been talking about the potential of moving down to around 1680. I think there's going to be continuing pressure there. The Dow index is continuing to put pressure there as well. I won't cover the Dow tonight. I'll probably do that tomorrow night if we continue to see this upward pressure continue. I've been talking about the Dow hitting 111. So if that happens, there's no way gold's going anywhere but down. And ultimately, I think if gold breaks down, there could be a massive break, maybe down to this fib target 2, which would be 1600 on gold. It's not looking good from this viewpoint anyway. So the final market I'll cover tonight is the Bitcoin, and Bitcoin is continuing, don't know how else to say it, is to defy gravity here. 19,158 is S1. We've managed to remain above that. The high's 2567, same high that we had. This is weekly as of last night. And we've got 2562 is R1. So we're doing S1, R1 so far. I don't know that there's going to be any upside here. And what's interesting are the PPMs are suggesting that there's not going to be a big collapse in Bitcoin at the moment. And we're still going to see some stable markets over the next several days. Okay, folks, this is going to do it for tonight's video. Sorry about this one tool I was using kept blocking the screen. I couldn't get anything to work. It was frozen, everything. So I finally got it off, didn't use it anymore. So thanks again for your patience, and we'll see you tomorrow in the live room. Just a quick announcement. We are starting an open public Discord that everybody can come into, and we're going to be really focused on the indicators using the PPMs, the market grid, all the components. There's 9 components. So I'll let you know. Hopefully by tomorrow night, we'll have that all set up and ready to go. Anyway, folks, thanks for watching. Hit that like button. Remember to subscribe, and we'll talk to you tomorrow night on YouTube, and I'll see those of you in the live room tomorrow at the regular time at 1 p.m. Eastern. Thanks a lot, folks.